The end of QE was meant to be the stock market's worst nightmare. The billions of dollars that the US Federal Reserve was pumping into the financial system would suddenly evaporate. And yet, a day after Fed Chief Janet Yellen announced the end of its QE program, all's well with our own markets. In fact, contrary to the worst fears, both the benchmark indices rose a percentage point each to close at lifetime highs.
This rally is on the hope of a broad-based economic recovery now that the Modi government is pushing the pedal on reforms. A section of the market is also betting on a rate cut in the December policy given the moderation in consumer price inflation. Bond yields have fallen to a fresh 15-month low, a clear indication that bond markets are already factoring in a dovish policy stance. Traders are now betting on Nifty topping 8,500 in the next couple of weeks itself. Make no mistake, this rally is here to stay, and that's the top story on Business Tonight.
A percentage gain and a lifetime high. That was the story of Indian equities today. The Sensex ended the day with a gain of about 250 points, touching 27,390, and the Nifty added 80 points to hit 8,181, scaling new lifetime highs. The previous were hit on September 8th. All this less than 24 hours after the US Fed said it was ending its $15 billion a month bond buying program, or QE3. A series of quantitative easing measures not just helped the US economy come back from the brink of disaster, but also led to money pouring into emerging markets like India. Today's rally on the stock market is a sign that investors are not just unperturbed, but also confident that the markets can withstand potential rate hikes by the Fed going forward.
There has been a lot of sector rotation and stock selection which has led people to have returns, but at a top-down, big picture level, we are at the sweetest spot that we've ever been. I don't think there has been a point at which you could say that we were as bullish as we are today.
The rally was largely led by property developers on the back of the government's move to ease the norms for foreign investments in real estate construction. Case in point, the nation's largest real estate company, DLF, would jump to a 2-week high. Add to that the deregulation of fuel and an ordinance on coal blocks, the government's reform drive is surely breathing confidence back into Dalal Street.
At this point of time, beyond IT, we still are, fairly positive on the pharmaceutical sector, and that is one of the defensive sectors in which we are, adding positions. The cyclical space, the interest rate sensitive and the cyclical space is a space that we would be, interested in.
Easing inflation and lower commodity prices are indicators that the macro picture is getting prettier after haunting investors for the longest time. And with the earnings cycle expected to improve in the next few quarters, there are hopes of lower interest rates and a pickup in growth in the Indian economy. So the new high might just be a precursor to a full-fledged bull run. Krishna Kumar, ET Now, Mumbai.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.